iBet Chat. I'm Joe, and I've been trading forex, crypto, and meme coins for about 7 months now. I'm gonna show you a few of my trading strategies. So this one I'm gonna show today is my long-term trading strategy. It's what I've been using for a while, and it has a success rate of 75 plus percent. Plus, it's also long-term. I'm gonna go through everything you need to know about it, how I found it, and even some screenshots of my trades that work on my live accounts. So yeah. Okay, bet. So also I just want to say you can follow me on Kick where I stream some meme coins or just chatting on Cookie Joe. My Instagram is Joe VB Andrew and my TikTok obviously is Cookie Joe. So let's get on with it. Okay, I bet. So for this strategy, we're gonna use some old terms, but still valid terms. You're gonna need a valid fair value gap, bullish or bearish. You're gonna need the daily high and the daily low of the previous candlesticks on the daily time frame. Then to make sure it's accurate, you need to find 50% discount zones on both the fair value gap as well as the entering trade. You need to find a breakout structure and obviously the market liquidity. You can trade this anytime, market open, during market obviously not market close, yeah. So we're gonna start off with the first thing. You're gonna hop on to gold, forex, bitcoin, crypto. It works with everything I tested out. Same with the 75% success rate. So you wanna hop on to the daily time frame. So the 1 day time frame. Then you're gonna see a chart like this. Then you wanna mark. So now you wanna mark, this is the daily candlestick. Over here you wanna mark the high and the low of that day, the previous day's candlestick. Okay, so then you can hop on over to the 1 hour time frame. And then again you'll see a chart like this, and it will be within the zone. This line is still the daily high and the daily low's candlestick. So now we're waiting for price on the hourly time frame to come and either sweep the low over here or come up and sweep the high. So let's say it swept the high, daily previous highest liquidity. So this is where it swept and it broke structure. So now we're gonna wait for price to come back down over here. Want price to come back down over here and break past this low that came in and swept and break. So we want price to come down like this and come right here. This is when we can switch on over to the 5 minute. So over here, 5 minute. On the 5 minute, we have one of these. We have the daily high, daily low. We have the sweep, the breakout structure. So price came. It might take a while. It's not always going to be instantly breaking structure and helping onto the trade. It does take a while, and it's not guaranteed that you will find a setup. But when you do, it's a valid setup because it works. So price may take a while, come down, come back up, but eventually it will, on a normal market day, hop over and break structure of that entry. So now we want to wait for a fair value gap. So let's say a fair value gap formed right here. I don't know if you can see nicely, but it is a fair value gap right there. Let's say, for example, there is 2 fair value gaps. So this is just this zoomed out so you can see properly. There's a fair value gap here. There's a small fair value gap here. There's another one. Which one do we use? These are all fair value gaps in the market. Which fair value gap do you use? So now we want to use the Fibonacci. So you want to also use the Fib retracement. You want to use the Fib retracement tool on TradingView or MetaTrader. So you want to mark now from that low, this low of this push down to the breaker structure to this high. You want to look for your 50% zone. So that means this is in the 50% discount zone of that fib retracement tool. So this is the fair value gap we mainly want to look for. We could maybe let it pop over here, then we take a position. Okay, so now we saw, yeah, we want this one. This is the good fair value gap. That's the fair value gap that we want. If you want to see another video about fair value gaps, just comment, and I'm sure I can make a fair value gap video on the valid and invalid bullish and bearish fair value gaps. Okay, so price came over here, broke. Let's say it takes a while, it goes down first, but it comes back up and hits this fair value gap on a normal days market. This is when we're going to take the trade. So we want to take a trade here, the entry. Want to put the stop, the take profit at the previous low, which can be a huge significant price, and the stop loss at about this peak over here. So it shouldn't pass up there. So let's say we take the trade and it goes like this. We took the trade, it lines up, we're happy, liquidity was broken, break of structure was broken, we found a 50% discount zone fair value gap, we found the daily previous highs, and obviously we use the fair value gap. You can use other things, for example, like you can use order blocks too. I can make a video about that too. When price comes, taps into here, we enter the trade, which is a sell, and if price came in a 1 hour and broke the previous low, we would have looked for a buy. So now, boom, we sell, comes a while, boom, hits our take profit right over here. So that's the strategy that I use all the time. It's a strategy that I look for as soon as I wake up. Before I go on a bus to school, I just look for the daily high, daily low, and then we wait for price to come. Normally, maybe second break at school, I would find a position like it came down and it swept liquidity. Now I want to quickly say which ones I use the most for. So we have gold. Gold is pretty good. Nasdaq, of course. Nasdaq US. You can use something like USD, Euro. I remember chopping really good USD Japan. I think I made a lot of money trading USD Japan. That was like my favorite thing to trade in the beginning because it wasn't too risky. Now let's talk about risk management. So to risk it, you can actually scope. I only scope in gold because gold is the best for scoping, in my opinion. So I only scope in gold. The rest, I let it run through. So for example, what I mean by scoping in gold is taps in, you sell, we place a bunch of spams, sells, comes down a bit, we take profit. Wait for price to have another push up. Like we have a push up here, we want to spam a bunch of sells, get a push down, take out, sell, and then sell the last part until it hits take profit. So that means if, ladies and gentlemen, if it comes here and it doesn't completely down, we already made enough profit that it cancelled out. If it decides to reverse on us, or news happens and it spikes up, then it'll hit our stop loss, but we would have made quite a bunch of money from scoping it. The rest, I would just let it run through completely, have good management. Risk $40 to make $180. So that's the risk. It's like a 1 to 4 RR. Okay, so that's the video. Bye. Bye, losers. Oh, snap.